Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Abby Joseph Cohen does not remember 1856. She's too young for that. But she does know what unified government is. It's really an interesting thing. A great paragraph. I'm stealing this from News Nation. I got some nice history here, if I can find it. But unified government is more common than we think. There's been 23 times Democrats have had unified government, 25 times Republicans have had unified government. Abby Joseph Cohen of Columbia University. We'll get to the markets. Abby, is gridlock good, or can we get something done with unified government that supports American finance and capitalism?
Wow, that's a big question, Tom, and thank you for inviting me to be here this morning. It depends what unified government decides to do. So clearly, if you have a policy agenda that is favorable, unified government is good news. If not, there are a number of things to watch out for.
Abby, what do you expect here? We've had obviously a big change on the political stage here in the United States. What's your expectation of a second Trump presidency, and what does that mean for markets? We've certainly had a big rally yesterday in financial assets. What do you expect going forward?
Well, let me put the marker out there, which is don't know, because we don't yet know, for example, who the key members of the administration will be. We don't know who the Secretary of Treasury will be, for example, nor do we have an idea of who some of the other members of the cabinet will be. The other thing that we're not sure about, of course, is what happens going forward with regard to regulatory policy. Now, there is a presumption that less regulation is good for the economy. That's not always the case. Obviously, regulation is not always perfect, but there are a number of areas in which looser regulation is, in fact, quite destabilizing and inflationary. So, for example, looser antitrust policy is typically associated with higher inflation, and that's something that we need to keep an eye on. The other thing that we need to keep an eye on, because members of the Trump organization have been chatting about this, and when I say Trump organization, I'm referring to the campaign, not the company. They've been talking about providing a very easy regulatory environment for crypto. And that's something that could, in fact, be problematic with regard to whether it creates a source of potential instability for the financial markets.
Listen to that.
Yeah.
I mean, I don't know. Let's do a crypto data check here. Right now, I quoted the Doge yesterday for the first time ever. 74,700. Down 1,100. We had 75,000 print on Bitcoin.
We did for Bitcoin. So, Abby,
but let's make the point, however, Tom, and that is there has been some discussion among Trump advisors that digital currency could be used on bank balance sheets for regulatory purposes. And basically over time, over history, we see that the best assets to put on bank balance sheets are the ones that are not quite so volatile.
Exactly.
She's so political. She's just got it down cold. She's laughing at me because she knows exactly where I am on this, Paul.
She knows what she's doing. Abby, I guess the last time we chatted, you were concerned about concentration in the market, as are a lot of people when you think about the Magnificent Seven or some of the AI trade here. Has anything changed there? How do you think about that, just the health of this equity market here?
Yeah, wonderful question. And if we had a crystal ball and we knew what earnings were going to be like in 2025, we might be able to answer it better. Yesterday's close on the S&P 500 in excess of 5,900 is something that really is touching the top end of the range that many people had expected as it relates to valuation for the S&P 500. So to think that the market in general can go higher from here, you really need to have an enthusiastic view about economic growth next year. But we also now need to worry about the interest rate aspect of valuation. While there's been so much focus about how much the stock market responded yesterday, there was also a big response in the bond market. And with higher interest rates, that creates more of an obstacle to equity valuation as well.
Are the earnings that we're seeing, Abby, this quarter, last quarter, and more importantly, kind of the forecast, are the earnings there to support this market, or do we really have some valuation concerns here?
Based upon consensus earnings expectations, things look like we are okay, but clearly there's very little margin for error. So should there be some unpleasant surprises, perhaps in one of the high-profile names on the company side, or perhaps some unpleasant inflation news, or interest rates move notably higher from current levels, that in fact could be problematic. But Let's go back to the original question, and that is Mag 7 versus the rest of the market. There are much better valuation opportunities among small and mid-cap names, and some people might also argue that there are some opportunities outside the United States. The problem, of course, is that the U.S. economy is looking far more robust than many other nations are at this point.
Abby, I think about, if this had occurred, all this maelstrom that we're in right now, it occurred 30 years ago, you'd be on with Lou Rukeyser Friday night, and Lou would turn to you and say, okay, what is the exuberance? Ed Yardeni, who we all respect immensely, models out the roaring 20s. He models out a bull market. I'm not asking you to give me an S&P call, but are the roaring 20s that we get with a Republican House, Senate, and presidency, can they lead to an exuberance that causes harm, or can we be managed in our enthusiasm?
The exuberance that you were referring to earlier, Tom, when Alan Greenspan spoke about it, was irrational exuberance. And the irrational exuberance that Greenspan often referred to was not just in the equity market, but also in the fixed income market. So we need to be looking there very carefully. And one of my concerns, and I think needs to be carefully monitored by investors, is what will some of these new policies mean with regard to inflation? The starting point is quite good. If you exclude housing, which I know is a big exclusion because it does harm many people, but if you exclude housing prices right now, core inflation is already under 2%. So it's a great starting point. There are, however, some possibilities that inflation could be rising from these levels. For example, if you have fiscal policy that stimulates demand, but not supply, all other things being equal, that's inflationary. Getting rid of the Affordable Care Act is inflationary. On a long-term basis, not paying attention to climate change is inflationary. Think about the wildfires right now in California, how much that costs to bring under control, to rebuild. And then, of course, insurance costs go up for everyone afterwards. Just think about insurance costs right now in the state of Florida because of the bad storms over the last few years.
Is the fiscal deficit, our debt in deficit, is it a constraint for President-elect Trump?
It is a constraint only if, from a political standpoint, it is a constraint. Right now, with the dollar as robust as it is, I think that there will be demand for Treasury securities from around the world. And I also think that at current rates and maybe higher rates that we'll be seeing, there will be demand for those securities and we can finance it. The question, of course, is the long-term one. If we have a situation where we in fact see lower growth in population and labor force, that does not bode well, for example, for the funding for Social Security and other needs of the government.
And there's something going on in America. For those of you that listen every day, it's just plain and simple. I disaggregate. There are the haves, the have-nots. I think we saw that within the tension, the disparity, the polarization of this election. And I want to wrap it around the Nobel Prize of Acemoglu, Robinson, and Simon Johnson. We hope to speak to Simon Johnson here in the coming days, the laureate on productivity, his book, Power and Progress. Abby Joseph Cohen with us now, Columbia University. Abby, there's a labor input, there's a capital input, and there's a strange thing, total factor productivity. Bill Easterly at a school south of Columbia makes clear it's a huge part of economic growth. Is our productivity gain going to an ever narrower part of the American public?
I think you've answered your question. And the answer is yes, of course, it has been. And one of the things that any new administration needs to address is to make sure that all of our people feel that they're participating in the American growth and the American dream. And one of the things that we need to focus on, of course, is long-term investment, by which I mean, are we investing in productivity? Are we investing in education in our people? And are we investing in the scientific merit and the scientific progress that gave us so much economic growth over the past few decades? And the answer to those questions will really have a dramatic impact on all of us. One of the things I'm concerned about, quite frankly, is something called Schedule F. Which has been talked about during the last few years. It was something that was, in fact, enacted by the prior Trump administration, but was gotten rid of immediately when Mr. Biden came into office. Now, what is it? It's basically not looking at the top level of political appointees in the U.S. government, but the next 40,000. So there are 10,000 political appointees. Below them are the 40,000 experts in a variety of categories, and under Schedule F, many of these positions would be converted to political appointments rather than appointments based upon what do you know. And I worry that this will affect, for example, a number of our science agencies, and will also affect a number of the agencies that are directly involved in boosting productivity throughout the economy.
Abby, again, we've been so focused on the political agenda over the last several days that we almost forget we've got a Fed meeting today, and that historically has had an impact on these markets.
With our future Fed chairman, Abby Joseph Cohen. I think she's shortlisted by President Trump.
Very good. So, Abby, what do you expect to hear from this Fed today?
You guys might recall that I started my career at the Fed. I was a very junior economist, and I don't think I'm being invited back. The Fed always works best when it is apolitical, when it looks at the facts that it has in front of it and makes a decision about what needs to get done. Obviously, they do a forecast based upon their prospects for the economy. And at a time like this, whenever a new administration comes in, you're never quite sure what the new policies are really going to be. There's a big difference between the campaign and governing. So I believe that this Fed will make an apolitical decision. They'll look at the data in front of them, which basically says the U.S. economy is doing well. Inflation has come down, except for housing, as I mentioned before, and of course the price of eggs, which the Fed can control because of avian flu. And I think the markets have it right in terms of expecting a 25 basis point reduction in the Fed funds rate. But let's be clear. What is happening in recent weeks, of course, is that intermediate and long yields are going up. So what we're ending up with is a steeper yield curve, a more normal looking yield curve. And who borrows at the Fed funds rate? It's not individuals, it's not corporations, it's banks. So the banks will be borrowing at a somewhat lower Fed funds rate. The thing to watch, particularly if you're an equity investor, is what's happening at the intermediate and long yield level. And yesterday, those yields all moved higher.
So, Abby, we're 80% through earnings for the S&P 500 here. What have you seen? What have you heard? In terms of guidance and outlook here from this earnings cycle for corporate America?
The cycle has gone well. The economy underneath it has been growing well, not as quickly as it was in the immediate post-pandemic period, but it's a good, solid, sustainable rate of increase. What I often look at, as do so many others, particularly this time of year, is the forward guidance. And what we have seen is that the forward guidance by and large is good. There are some exceptions. There are some companies with idiosyncratic problems that have decided not to issue forward guidance. But in general, what companies are saying is consistent with the consensus economic forecast, which is that there is no recession on the near-term horizon for the United States. Growth is pretty good, and it's good enough to generate not just profits, but also jobs. Right. Last month's data were, disrupted by strikes and storms and so on. Right. But it looks like we're creating enough new jobs for everyone who wants to look and get one. There's obviously friction. People need to take some time to find the right job for them. But this is an economy that's doing quite well.
Abby Joseph Cohen, thank you so much. Thrilled to have you on here 2 days after the nation votes. Abby Joseph Cohen of Columbia University.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
I'm not going to mince words. We protect the copyright of all of our guests. Go to Morgan Stanley to get a jewel of a lengthy post-election report by Monica Guerra, head of U.S. policy at Morgan Stanley Wealth Management. Let me just get to Exhibit 1, because it's 1600 Pennsylvania Avenue. They're going to get to Exhibit 1. Net interest outlays could account for nearly 2/3 of the federal deficit. Forget about all the happy. What's the budget constraint on the president-elect?
Yeah, that's a great question. First, thanks for having me, guys. It's great to be back. But
you
when
got
we're
huge
thinking
response
about,
when you were last time.
Yeah, good.
It was Zentner-like. It was like huge. Continue.
Fantastic. When we're thinking about the debt and deficit, what's important here is if you have a unified government, if we get to a place where Congress is unified, debt becomes less of a factor. Yes, we have this ballooning interest rate piece. It's going to have to become part of the discussion. But when you have unified government, that's when time to get your wish list items through. And so it becomes less about fiscal responsibility. So the best thing for the debt and deficit is actually to have that gridlock Congress, because then fiscal responsibility becomes the calling card.
So what's going to happen here without a gridlock Congress?
Yeah. So, if you're looking at just the baseline for the Tax Cuts and Jobs Act, and you're extending that, it adds about $5 trillion to the federal deficit over
how long?
10-year period. 10-year period. What it doesn't account for, these estimates, is any kind of government reduction or efficiency measures that Trump has talked about.
Musk measures,
if you want to call it that. I like that. I might use it.
Use it still. Copyright. Mateo gets it.
The other factor is that there's no other sort of revenue raisers or clawbacks. So, for example, if they rolled back some of the clean energy tax credits, money that they can bring back into the government.
Paul, a clawback at home is where you order the offspring. They have to eat the leftovers seamless.
Exactly.
That's a clawback.
Monica, they say financial services, and we saw the big stocks, JP Morgan, Morgan Stanley, Goldman Sachs yesterday just soar.
Yep.
Talk to us about financial services and how a Trump and a Republican administration, Republican Congress will look at the financial services industry.
Yeah, a lot of the rip from yesterday is because of the deregulation promise. Okay. And that's what you're likely to see, especially with financials. You're likely to see an SEC that is shaped differently and has different leadership, as well as potential push on the Basel III endgame provisions to be looser and more flexible on the cap requirements. So that's going to be a really big factor. Other areas that are deregulatory, right, are AI, tech, crypto. So we're likely to continue to see tailwinds in those areas.
How about if I'm an M&A banker or an M&A attorney, I feel pretty good now, because the regulatory environment from the Federal Trade Commission to the Department of Justice, it's been tough to get deals done and improved. Is that also a beneficiary?
That is going to be a huge beneficiary.
Yeah.
Lena Khan does not have a job in January.
Right.
She probably will be employed, but not in the government. And so at this point, that's going to be an area that we look to. You could see M&A activity pick up as a response to that.
Are you paying attention to a Trump cabinet? Because I'm not sure where the Trump cabinet's going to come from or when we're going to hear about that. But my assumption is that's going to be important as to where policy goes.
Yeah, and we're definitely paying attention to that. We're paying particular attention to, who's, heading up the Treasury. One of the things that is critical that we saw even at the RNC convention was that this is really Trump's party. So a lot of the rank and file are officially sort of sidelined at this point. The party has changed, the mood has changed, and so it'll be a lot of folks that have ideological similarities with Trump.
Part of the Guerra charm is on your resume, Director of Capital Budget and Economic Development for the City of New York. It means she gets great Yankee stickers.
Yeah.
Not that means anything. Monica, just to cut to the chase, with the immigration shock of this election, how do we deport, exit, remove a migrant immigrant from, say, New York City or Chicago? Doesn't really matter. How do you actually budgetarily affect that?
It's going to be greater funding towards the Department of Homeland Security. That's going to be the first place that they increase spending. We think that that's going to be underneath a national defense and security budget line. Now, if we're thinking about the actual practicality of it,
yes,
state
that's
by
your
state,
world.
right? State by state, it's going to be an issue. You're going to have New York, fight to keep people, safe, or a sanctuary, especially in sanctuary city structures. That's going to be a problem.
That's going to be an Albany issue in the case of New York, not a New York City issue.
New York City could get involved, but Albany is going to probably be leading the charge. Now, the thing that's important here is that the states that are, friendly to these policies, will open the doors and allow for a smooth process. Doesn't mean that the DHS and the federal government doesn't have jurisdiction in parts of New York. Right. I'm not the expert on that, but I can tell you that the legal battles in the blue states that especially take their sanctuary city responsibilities, seriously, that could become, a real problem for the administration.
Thank you so much to you and to Morgan Stanley for your perspective on this. We'd love to have you in as this debate continues into 2025. Monica Guerra is head of U.S. policy for Morgan Stanley.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Jackie Bowie's here, our managing partner. And on YouTube, you can see that Jackie Bowie is ensconced in this November with the red poppy. Tell our American audience, you have a jeweled red poppy. It is lovely. Yes. Tell us of the British and World War I and November 11th and the red poppy.
Yeah, well, it's such a big day for us in the UK where, and whilst the poppy is to represent obviously the poppy fields after the war ended, the celebration and recognition on the 11th of November is really through all the wars and people who have given their lives for their country. So yeah, we take it very seriously. You can buy lots of different types of poppies now, and obviously all of that donation goes to the Royal British Legion for the veterans.
Very good. Let us talk about the loneliness of the United Kingdom. We have a left government, a Labour government. Tories were trounced. John Burns Murdoch has a fabulous chart today showing the crater of the Tories versus Italy versus Trump in the election here in the United States. How alone is the United Kingdom right now within G7?
Yeah, well, it certainly feels like some of the political statements that were made in the run-up to the election and afterwards are really divergent from what's happening in the rest of Europe. We talked briefly, obviously, this morning just on the stance on immigration and different countries taking a slightly stronger view on asylum seekers, countries that were very pro-immigration before. So the Labour government have come in and kind of paused the previous government's route to taking illegal migrants to Rwanda. That was the plan, to take them for the processing and then decide whether they had the right to remain in the UK. So that plan is now being completely taken away, and we're just kind of waiting to see. So yeah, it does feel that the UK is sort of out in a limb, which is interesting, right? Because we're an island. So if anything, we should potentially have a stronger position.
So the Bank of England cut rates again today. Give us a sense of kind of what the Bank of England is thinking about in terms of interest rates and the economy in the UK.
Yeah, so 25 basis points was as expected. if we had talked just a week ago before the budget, we would have said 25 basis points for November and a further 25 likely in December. And that's been the big shift. So the UK budget was absolutely about tax raising, about spending on public services with no conditions of improvement in productivity. And that has led the market to start to reduce their expectation that we'll get a further 25 in December. I think the other thing to bear in mind is everyone's focused on this headline inflation target, which, at the 2%, obviously the Bank of England is just out, so we've not kind of digested the full statement yet, but it looks like the inflation forecast for next year will be around 2.6, 2.7%. So you're starting to see that you're not getting inflation at that 2% target.
Why is the American Catherine Mann, as a member of the Bank of England, dissenting and saying don't cut rates? Is it a nominal GDP call?
She's always been kind of on that side of the fence if you look at her voting history.
Sure.
So she's been consistent, for one. But yeah, you're right. I mean, an 8-1 vote with her being the only dissenter this time round. She continues to focus on that inflation number, and particularly the underlying services inflation and wage inflation in the UK, saying that this inflation issue is not under control, so rates should be kept higher.
All right, if Tom and I were to come over to the UK, which we're working on that as we speak,
Yes, we are.
And to go to the Highlands or the Midlands, and what are the person on the street, what are they saying about the economy in the UK these days?
I would say it's very similar to the US, in that everyone is talking about and we say this cost of living as a catch-all. The major things for the UK, which I think is the same in the US, is food prices.
Okay.
You're right. Yeah, and the second thing for the UK, which I don't feel you get the same situation here, is fuel prices. So we have huge taxes on our fuel. Underlying fuel prices are just higher in the UK. So if you're driving, a combustion engine, not an electric car, and the cost of filling up your car and heating your house has gone up massively. I think my utility bills are probably up about 45%.
Then how can Labour ram through tax increases?
Good question.
I'm fascinated.
That's why
the debate is very different from here. There's a huge understanding that Mr. Trump, day 1, day 2, day 3, will extend or codify, if you will, the Trump tax cuts. Is it just genuine Clement Attlee austerity from the middle of the 20th century? Is it just England demands to be austere?
Well, you would say it's the opposite, right? Because the government are spending like billio, despite the deficit being where it is. Again, similar to other countries, the UK is not alone in that. Yeah. But to put through all these tax increases, which are to support the public sector. So let's look at where that spending is going. When you're increasing taxes, particularly on employers and national insurance taxation, there's nothing in it which is growth orientated, which is why it was taken so negatively. I don't think anyone has any issues with government spending if you then end up, really boosting growth. But after the budget was announced and people saw the extent of the total spend over the next 4 years, but no change to the growth forecast.
And literally almost all of the Tottenham Spurs soccer team is threatening to leave the country, which actually would probably be constructive for Tottenham.
Exactly. Talk to us about, I don't know how many years on we are from, 7-8 years on from Brexit. What's the feeling today? What's the consensus today?
Yeah, people have stopped complaining about it.
Okay.
I think the one thing I would say though is it's been really difficult to separate out the impact of Brexit on the economy because we hit COVID, right?
Okay.
And you're starting to say, well, is the UK situation because of Brexit or because of COVID? If you dig really deep into it, and looking at some of the trade numbers, etc., it looks like the UK has actually done okay. But there's a lot of caveats.
The dumb question of the day: when you fly to Berlin or Geneva, do you have to go through customs now and passport control?
Yeah, so you always had to go through passport control, but you were classed as an EU traveller. And
now you're not.
So now you're not.
And is that much more difficult now?
It depends where you go. So interestingly, if you go to, I had a few trips in the summer, fortunately, to Palma in Mallorca, so Spain. You just go through the electronic gates as normal. The only difference is you have to get a stamp. If you go to Paris or any French airport, you are in the
here we
long
go.
line. You are in the long line.
See, that's the news you can use, Tom.
That's the news. Yeah, I was sort of shocked how easy it was when I went over to Rome last month.
They had the gates open
But
for
the
you, Tom.
luggage took hours. The luggage was an absolute outrage. I mean, it was like people were really upset.
And you've got many pieces of luggage I've seen.
We
Tom
have
travel.
like Emily Rowland's coming in from John Hancock today, and she's been dead on about American exceptionalism by large cap America. Can we buy large cap FTSE?
You can, but the definition of large cap in your global world, I mean, large cap FTSE is not going to be very large cap for you.
So it is Little Britain.
And the other thing, I think we talked about this when I was in before, about the
I don't
number.
remember who I talked to last half hour except Lisa Mateo.
I remember you. We talked about your
good.
dinner at the Savoy. So,
Dinner at the Savoy.
Your dinner at the Savoy. The interesting thing for UK stocks is, and you'll have seen this from your market, where there's a lot of the larger companies deciding to delist from the UK and choose to list in the US, because they have a broader investor base. Arguably their stock gets better valued. So a combination of that and the fact that private equity have been doing a lot of take privates in the UK, so delisting companies.
Yeah.
The choice of things to invest in the UK is getting smaller and smaller.
Yep.
Jackie, thank you. What a brief. Jackie Bowie,
You're
thank you
welcome.
so much with Chatham Europe.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Without question, our conversation of the day on the future of the left, the future of the Democratic Party. Thrilled, just really thrilled Christina Greer could join us from Fordham. She's truly expert on the pulse of a nation that I guess was defeated, we would say, 2 days ago. We'll talk to Professor Greer about that. A lot of investment ideas as well, again, with Futures Up 14. Let's get right to it. We're on YouTube. Subscribe to Bloomberg Podcast. Our poll's out there. Please take the poll out at YouTube, Bloomberg Podcast on your commute this morning, Apple CarPlay, Android Auto, and Good Morning in Washington, 99.1 FM, up to Boston, 92.9 in Boston. From the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
And after the Dow surged to its biggest gain in 2 years yesterday, right now, Dow futures little changed, up about 10 points. NASDAQ futures up 0.4%, 99 points. We have S&P futures up 0.2% or 15 points. We have the 2-year yield at 4.22%. That's down 4 basis points. The yield on the 10-year, 4.39%. That's down 3 basis points. To currency is a difference here, too. The dollar retreating. It had its best day since 2022 yesterday. Japanese yen stronger, euro, British pound stronger. We have Bitcoin. What a difference a day makes there, too. Down 1.5% after it rallied almost 10% yesterday. It's now at about 74,000. Checking in with 2 stocks that really soared after Donald Trump was elected president. Shares of DJT, they're now down 14%. And shares of Tesla down about 0.3%. Moving over to shares of Qualcomm. That's the world's biggest seller smartphone processors. Well, they're up 5%. Shares up 5%. It had a bullish sales forecast. Smartphone demand picked up. But then you have ARM Holdings down 3%. It had a little bit more of a tentative outlook. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Greatly appreciated. We've been talking, Eric and I, as we piece together the show, of who we want on to pick up the pieces after a concession speech yesterday by Vice President Harris. And the first name that came up holds court at Fordham University. She holds an absolute franchise. There's no other way to put it on blacks within the political process in America. There's one item, which I just say, I love the title. I mean, she sits all day and tries to figure out these titles. A Nation Divided Still, How a Vote for Trump Says More About the Voter Than the Candidate Himself. That in 2017. Christina Greer joins us this morning. Christina, there was an eloquence in Vice President Harris's exit yesterday. How do the Democrats pick up the pieces?
Good morning, gentlemen. I do think that the Democrats need to come to the table and try and figure out what happened. Now, keep in mind, it's barely been 36 hours. So
Sure.
This all feels a little bit like Monday morning quarterbacking. Go Eagles. So as the Democrats try and figure out a 50-state strategy, as they try and rebuild state houses across the country, as they try and tap into whatever policy issues beyond just economic issues. Now, keep in mind, many Americans felt they go to the polls because of pocketbook issues, but they felt inflation was too high, that, when they had their bills at the end of the month, things weren't going in their direction. It's a complicated story for Democrats to tell, to say, well, under Trump and some of his policies, and usually in Republican policies with tax breaks to the wealthy, Democrats have to come and rebuild the social safety net that Republicans tend to take away, and also rebuild the economic foundation of the nation. That's a much longer argument because voters don't really care. They care about how they feel in that present moment. And clearly that message wasn't articulated to the voters the way the Democrats needed it to be.
To pick up the pieces and looking at the punditry across the East Coast and the elite, you're part of the game, the educated elite and all that, is you correctly state they have to speak to 50 states. Doesn't that simply mean the left has to move to the middle?
Well, this is where it gets frustrating. I mean, in the past, Jesse Jackson is the architect of the 50-state strategy, if you remember his 1984, but his incredibly successful 1988 campaign. But, I always show my students the distribution curve, right, that hump in the middle. In the past, we have had presidents who all clustered around the middle. We had George H.W. Bush, we had Bill Clinton, George W. Bush, Obama. That is, in our modern presidency, that's where presidents hung out. Obama was not a radical president.
I don't mean to cut you off. This is really important. David Brooks's essay a couple weeks ago was brilliant on this, as you are right now, Professor. What happened? How did the Democrats decide to polarize versus stay to the middle as President Obama and President Clinton did?
Well, the historical context is important because Donald Trump pulled the party far, far, far to the right. Now, we've seen people campaign on the margins, but then govern and win a general election in the middle. He was successful by never coming to the middle. Never. He pulled his party to the far right because in many ways it's a campaign of populism and the candidate himself. So Democrats tried to chase that as they moved farther and farther to the right and left out a core element of their base on the left. And so as they try and figure out what that means, some of the concern among Democrats is, since the Democrats have moved more to the center, more to the right, will they stay there or will they go back to the left and really hammer in, which I think they did an excellent job, but hammer in some key issues: union membership, making sure public education is accessible, making sure climate change is acknowledged so people don't have to worry about constantly moving because of climate and becoming climate refugees within their own country. There are larger, much more complicated issues that the Democrats were trying to explain to the American public, but Donald Trump sells something very different. And we cannot ignore the fact that he sells a type of brand of American whiteness that is very attractive to a large percentage of this country and many people who aren't even white. There's an element that James Baldwin explains so much better than I. There's an element of white supremacy in this nation that we have to be real about the fact that it still exists, that he sells, that is incredibly attractive to voters. And has been for quite some time.
And Christina, you point out one of the issues I thought was really interesting as I start reading some of the analysis of the voting, that President Trump did surprisingly well with African American and Latino, and particularly on the male side. What do you make of that?
Well, I think some of it is just baked in misogyny, period. There's some people, men and women, who will never be able to vote for a woman at the top of the ticket. We're one of the few democracies of our stature who's never had a female elected leader, and I think that stands out on the global stage.
Sure.
His inroads with African-American men, albeit in certain states, he went up a few percentage points. And I think that is a conversation in a Black politics sphere, because Black people are so ideologically different, but by and large are trapped in, we call it party capture, in one particular party. However, Black women and Black men are still, by and large, incredibly more supportive of Kamala Harris and the Democratic Party. writ large. Latino men and a growing population of Asian American men as well are more attracted to the populism and the economic promises of Donald Trump. Now, they remain to be seen because they were not materialized during his first tenure, but there is a certain level of, if bell hooks explains sort of supremacy to us, of patriarchy that is incredibly attractive to a lot of new voters.
Christina Greer, Wendy Schiller was on earlier from Brown, I think associated with a more democratic tinge of academic politics. And she mentioned how Dukakis went down in flames, and you turn right around and you find a centrist Southerner in William Jefferson Clinton, and off you go with the Democratic Party recovery. Do we have, within a fractured Democratic Party, the ability to move to the center, whether it's to the South or the Midwest or the blue wall that Trump took?
I think we're going to have to excavate what states, Georgia is increasingly purple, but it's not just the voters, it's the infrastructure in many of those states. We have, secretaries of state that make it harder and harder for people to participate. We have to excavate what happened in a place like North Carolina, where Democrats did incredibly well. Democratic, governor, lieutenant governor, attorney general, but somehow the presidency was lost. And even in Virginia being a little tighter. So it really, honestly, for me, depends on who will be in charge of the DNC and the DCCC to really organize some of the data that we're seeing and we're still seeing.
We got time. This is really important. Thank you so much, Professor, for bringing this up. Who would you like to see to take that tough job to pick up the pieces of a shattered left?
Honestly, someone like a Pete Buttigieg, who clearly has a way of serving as a faithful surrogate, but understanding a zeitgeist of the American public that I didn't think I'd ever say that, but he's quite impressive in a 360 view.
Professor, don't be a stranger. Thank you so much. Christina Greer, Fordham University.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.